Monday, September 20th, 2021, Monaco 64, home of alternative economics and contrarian views. So things are exciting this morning in terms of the market movements. Is Evergrande in China just one of a few black swans out there? Have we got a flock of black swans, which would be quite outrageous, but not surprising in a world where the everything bubble has been growing more and more, has been growing bigger and bigger. I would say since 1987, when Alan Greenspan instituted his put, which gave markets, speculators, governments, energy companies in the UK, the idea that if they were big enough, they would always be rescued. But how long can we keep rescuing banks? Now they're talking about rescuing energy companies in the UK. They're not just rescuing the companies. They wouldn't be just rescuing the companies. They would be rescuing consumers who, just like back before the Icelandic banks collapsed, they thought that IceSave, which was an Icelandic bank here in the UK, paying 5% interest while everyone was paying 1 or no interest, was a great deal. So it's the same thing with energy, these challenger energy companies that seem to be basically bucket shops providing you energy. And people thought, oh, I'm going to save so much using this energy company. But now we find out that these energy companies have no clothes, like the emperor has no clothes. And we're finding out, of course, as well, that the Chinese property market is a huge bubble. It's not very surprising. It's been out there in the news for many years about the ghost cities that they build. But we still have to see what's going to happen, whether it's going to create the contagion. We still also have a problem in the US with the debt ceiling. That could be another black swan. I've heard that one of the rating agencies, I think it's Fitch, it could be Fitch, they've got the US Treasury credit on negative watch. Remember that in 2011, S&P downgraded the US credit rating from AAA to AA. Their CEO got in trouble, of course, but who knows? Yes, with this everything bubble, as I said, things are getting really interesting. So the markets are quite volatile this morning. We are continuing to see the stock markets drop. Precious metals, kind of a different story overnight, and maybe a little bit encouraging. Of course, physical precious metals, gold and silver outside the system, is the best insurance one can have, in my opinion, to be exposed to this financial system, be it through the stock market, be it through holding bonds, be it through having a lot of cash or unsecured loans with these big banks, could be troublesome. Did you know that the UK equivalent of the FDIC only has about 3 to 4% of assets to cover all UK deposits, and it could be even lower these days. This 85,000 guarantee is something very ephemeral if we have a systemic crisis. And could evermore be the domino that sparks loads of black swans. It's possible. I spoke with Mike in our Mike and Mario show on Saturday. I posted on Saturday. And I said, it's not similar to Lehman, but it could be damaging. It could start a massive collapse everywhere around the world. Who knows? And we have other troubles right now, the supply chain problem that's been around. We have inflation well, we've got the consequence of inflation, which is rising prices, which is disrupting even more the supply chain. I think China itself, their domestic economy, probably will suffer, but they're probably in better shape. They have a lot more production and infrastructure than we have in the West now. And I think the Evermore problem could make it even worse. All the supply chain problems around the world. We're so dependent on China for everything. But we have to wait and see what the Chinese government does. And of course, the West is always critical of China, and I'm not defending China, but we are even worse in the West. We've been bailing out big businesses for decades now. The UK government is looking to maybe bail out these energy companies even, and this is going to hurt even more the people they're trying to help. So what's the solution? Well, as I've always said, the solution is for government to administer the rule of law and be a minimal government. I've gone through some of the government spending as a share of GDP going back like over 100 years, and we used to be in the single digits in terms of percentage wise. Now we're getting to 50–60% of GDP. Government is too big and it creates all these problems. And as I said earlier, the bigger you make the sector, the more the bankers and governments give the sign that they won't let things collapse, the more aggressive bankers get, the more aggressive energy companies get, or any kind of company. If the government is always there to bail them out, it gets even worse. And I think that's what's happening. I think China is a little different because they've actually been trying to, the government there has been trying to crack down on speculation. Here, they're making no effort. The housing market is a bubble. Mortgage rates keep going lower, and there's nothing to stop. They want people to get into the housing market, to keep house prices up, because it's a huge part of the big bank's balance sheet. So, yeah, interesting times. So right now it's 8:30 a.m. London time. So let's have a look at where the major indices are this morning. We will look at gold and silver, of course, as well. But today things are kicking off. We've got the Hang Seng down about 800 points, which is down over 3%. And we've got like the Chinese 8 shares, they're down over 3%. We've got the Nikkei in Japan down about 100 points, only about 1/3% though. And the Dow future right now is down 410 points, just over 1%. The NASDAQ 100 future is down 125, about 0.82%. And the S&P is down 1% or 42 points. The FTSE is down 56 at 6883. So yeah, the FTSE is trading pretty much where it was in the late 90s, 99, 2000. So it's gone sideways for over 20 years. So what about the precious metals this morning? How are they behaving in relationship to all these problems popping up? Well, gold did trade lower towards the low we saw last week. It got down to 1742, but right now it's basically at 1752. It's down just over $2. The high has been 1759, but more surprisingly, silver is doing relatively well. Even though we are at a 22 handle. And as I said yesterday on my live stream, you might want to watch my Sunday live stream. If you don't know, if you're new to the channel, I make a live stream every Sunday at 9 p.m. London time or 4 p.m. Eastern time. And I spoke about the fact that I bought some silver over this weekend, some more Britannias, so I'm not concerned at all. I want to be out of this system as much as possible. Of course, I have an exposure to miners, gold and silver miners in terms of stocks, but it's not a huge part of what I hold. So silver right now is actually up 6 cents, which is about the only thing that's up here when I look at my screen. But it did touch the low that we saw recently when we had, a few weeks ago, we had that flash crash in gold and silver overnight. We got down to 2202, and I remember very well that was the low that day. So overnight we went to 2202, and now we're at 2245, which is up 6 cents. So something's going on there. Have we bottomed in gold and silver? Who knows? I think we're getting closer and closer. Of course, from tomorrow, we have a Fed FOMC meeting. It starts tomorrow and ends on Wednesday. On Wednesday, they'll have the press conference, an announcement, and we're also going to have the forecasts by the FOMC, the press conference by Jay Powell, who's in trouble right now about insider trading, him and other Fed presidents. Some people are speculating this could be a political move to get rid of Powell. I think President Biden needs to nominate a new chairman of the board, I think February 2022. We'll have to wait and see, though, for that, if there's more to it. So what about the currencies this morning? Well, we've got sterling down 1/3% at 136.81. So sterling is getting hit hard relative to, for example, the euro. Euro is at 117.12. It's only down 0.1. The dollar is down 0.2% versus the Japanese yen at 109.78. The dollar's up versus the yuan, about 0.2% at 648.50. So yeah, I've noticed the yuan has weakened a little bit. I think we were around 643, 44 recently. So the dollar's come back up. Even though if you look back in the last year or two, we're still, the yuan is still relatively strong. I think we had a huge double top around 720. The dollar got up there, and now we're around 648. The Evergrande situation in terms of contagion, I think one of the big problems might be for foreign investors who have about $7 to $8 billion of their bonds. And $7 to $8 billion doesn't seem much, but with the leverage, who knows? And also the 300 billion or so in China of liabilities that the Evergrande group has. So let's continue with the FX rates here. Where's the Aussie dollar this morning? Aussie dollar is down about 0.4% at 72.36. The dollar is up 0.25% versus the Canadian dollar at 128. And the New Zealand dollar is down about 1/8 versus the dollar at 70.28. So now to some of the general commodities. We've got WTI crude down just over 1%, trading at 71. We've got high-grade copper down about 2.4%, trading at 414. That's the China effect, I would say, there. We've got natural gas down about 1.8% at 504. I think if natural gas corrects down very sharply, maybe it might help the UK energy companies, but I think it's a little late, too late now for that. We'll have to wait and see, though. And to finish off, just look at the 10-year yield, see where the benchmark risk-free rate of return is, right? Risk-free. Well, it's down about 2.5 basis points at 1.35%. So If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great start to the week. Take care. Bye.